Mike Cintolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader. I'm here with your Cabot Weekly Review, recording this late Friday morning on January 24th. So it's the second nice week in the market, second productive week that has improved the evidence, okay? Mostly the top-down evidence, individual stocks, not quite as bullish as I'll talk about in a second. But overall, the intermediate term trend by the letter of our law anyway is still neutral, but I would say if the market doesn't fall apart, today, Monday, Tuesday, that sort of thing, they'll probably get a green light. The broad market, not as strong as the big cap indexes, but it has had a nice rebound here, no doubt about it, which is very encouraging. And, the individual stocks have perked up. And like I always say, up is good. Okay. So it's a good thing. I just wouldn't say, as I wrote about in Cabot Growth Investor this week, I wouldn't say it's quite decisive yet. Not a ton of stocks hitting new highs, not, a lot of volume behind a lot of the moves that I'm seeing. Some stocks look like that, but a lot of them are just kind of sort of going from the bottom end of a multi-week range to the top end, which again is a good thing, just not quite decisive yet. That's not predictive, it's just descriptive. We're only 7 or 8 days in this rally. It's not like we've been rallying for 4 or 5 weeks and nothing's getting going. That would be different, or very little getting going. And plus we have earnings season coming up and investor day. So we are starting to see some gaps here as earnings season's sort of getting more into sort of the glamour and growth stocks, but we'll just see how it goes. In Cabot Growth Investors model portfolio, we had been pretty cautious, taking a lot of profits, mostly in December actually. We did a little bit of buying this week. We're about 48% in cash, which to be clear is high, kind of higher than I would want. But from here, it's just going to be a day-by-day, week-by-week thing. If we start to see a few stocks pop out of there, or the ones that we own, are really getting going, we'll put more money to work pretty quickly. But for now, we're kind of starting slow, letting the markets pull us in, okay? All right, let's hop in the charts. I'm using a program called Market Surge. It's a product of Investors Business Daily. You can learn more at marketsurge.com. As always, start with the indexes. So again, the big cap indexes are stronger than, the rest of the market. But I wouldn't, and there's some, you'll see some stuff about divergence with the AD line. So we'll see how that plays out. But to this point, I would say two things. First, this is the NASDAQ. It's above its moving averages, and just the recovery is what I'm focusing on now. 2 weeks from now, this recovery won't be, the news of the day. But for now, the angle of attack here is pretty good. We are back into this 20,000 resistance area, if you want to think of it that way. So we'll see how it goes, okay? I wouldn't say we're in a point where, hey, I'm hoping we get a couple of down days because there's all these stocks I want to buy. Right now, I would say we're at the point where, if you had 1 or 2 bad days, whatever that means, 1% down in the indexes, stocks get hit, it would kind of cast a little bit of a cloud over what we've seen the past week and a half. So we still want to see more progress from here. But overall, nice snapback by the NASDAQ. You could say the intermediate term trend here is positive. S&P 500 even stronger, actually clicked a new high here. The rest of the market, not quite as good, but this is the New York Composite, so it's shy of its high, so that's a divergence. But again, I'm not going to look at this and say it's bad, you know what I mean? And we are starting to see this 25-day line turn up. So like I said, as long as we don't really sort of give up the ghost, today, maybe Monday, we're probably going to click into an intermediate term, back into an intermediate term uptrend. This is the IJR, which after talking with Tyler London, who's our small cap aficionado, he prefers the S&P 600, which actually we do use in our intermediate term model. But this ETF is for the S&P 600, pretty similar to the Russell 2000. So this is the weakest. Small caps remain sort of the laggard, still, down, sideways, lagging. The mid caps are a little bit better. This is the S&P 400, okay? So overall, I would just say the intermediate term trend, top down, turning up. And this comes after we saw near-term sentiment take a hit last week. So there are some pieces in place there for the components for a rally, okay? Similar story for, excuse me, I got a frog in my throat. This is sort of the IBD. Well, let's look at the actual IBD 50 index. Okay, this is sort of what we're seeing. It's up, it's above the 50-day line, it's above the 25-day line, but it's kind of right in the middle of where it's been here the last, few weeks. Some things are a little bit better. This is the IPO fund near its highs. The equal weight S&P kind of looks like the New York Composite, the equal weight NASDAQ 100, if I can get this, QQQE. So everything, what I would just say is the last week and a half or whatever it's been has been good. Now it's kind of like what happens from here. If we have, 2 or 3 bad days from here, it's going to be not the end of the world, but kind of like, all right, we're still fighting through this sort of thing, or we're still news driven, whatever news comes up. But if we can kind of calmly digest and then, thrust higher, I mean, it certainly would probably not just be good for the market, but present a lot of good opportunities. Okay. In terms of just sectors, I just want to bring up one thing. So we are seeing a little bit of a bounce finally in the consumer staples. This is XLP, but obviously still lagging. Now, if we start to see, like I always say, if we start to see the NASDAQ and growth stocks kind of do this, and all of a sudden, this starts kiting higher, that would be sort of a yellow flag. But, that's just playing through scenarios. Right now, no warning sign, no piling into defensive stocks, and really haven't seen any buying in defensive stocks for weeks, which was kind of a clue that the world was not ending, in December and January. Just other sectors, I find this interesting. XLI, which is industrial, so I mean Caterpillar and stuff like that. But again, just sort of the angle of attack, so to speak, by the bulls, just very, very strong here. And I pay particular attention to it. In early January, if you start to see a ETF or a sector really change character, it has a decent chance of persisting. I'm not saying because of this move, XLI is going to go up for the next 12 months, but after these things, have gone through a correction, it does bode well, okay? And I wanted to show you this chart, which this is from Market Surge, but this is just the oil and gas sector. There's other ETFs, but obviously volatile, but I find this interesting, again, with this sort of just very, very sharp comeback since late December, probably a lot of tax loss selling in there last year. We'll see how this pullback goes. Again, if it really pulls back here, forget about it, or whatever. But overall, and we will talk about a couple, there are some intriguing names in some of these energy areas that are just breaking out from 2 or 3 year structures. Okay. In terms of stocks, there's not a ton of breakouts, not a ton of new highs. I mean, there's some, but it's not like super widespread. It's not like November, December, anything like that. One thing we're seeing and we're getting questions on, so this is a good example, not that this is common, this is pretty strong comeback, but this is kind of a good example of what I'm talking about, which is good but not like decisive. It's not a bad thing. This is Palantir PLTR. Okay, just to give some background, the original, to me, this is how I look at it, just relative strength line and all this, the original kind of like getting going party, like, okay, the institutions are buying it for real, not just like nibbling around the edges, let's call it last August. And then it had about a 4-month run. It went from 30 to 80 round numbers. So a big run, okay? Then you have a sharp correction, even though it doesn't look like it here. It was about 25, a little over, probably 27%, I think it was. And now it's come back. So now this is what I mean. Price, you can't take volume, you can't take to the bank. Price is what counts most. And you've just seen it kind of go up day after day after day right back to its highs. You've also seen no buying volume here. You know what I mean? And now it's kind of right back into this sort of resistance area, I guess. So it's kind of like, what do you do with it? So we still own a position, so I'm just holding it. You know what I mean? Like no complaints at all. But this is kind of, I don't want to say this is the common pattern, but you do have stocks that had some sort of run, some sort of correction, and then they either, deeper correction and they've bounced all the way back or close to all the way back, or you've had stuff that's held up pretty well and it's kind of poking its head out to new highs. But it's not quite, the question is what happens from here. I'm optimistic, we still own some, but if it really pulls back, it's down 6 points on Monday or whatever. I'm just making that up. But all of a sudden it's like, ooh, that's kind of toppy at 80. But you just kind of have to see how it plays from here. So it's done what it has to do to kind of get back in the game. Now the question is it going to be like a star performer or not? Okay, so there's just a lot of that sort of in-between action. Good, certainly good. But what do you do with it? Is it, are you going to go buy a new position here? You could, but, I wouldn't say it's a classic, entry point, okay? By the way, just as an aside, just another stock we used to own, now's a classic time to use the old tennis ball versus eggs. This is AXON, AXON. Stock broke out here, had a big run, and then corrected, and now it's bounced. Now, again, we'll see how it goes. Sometimes these bounces that start slow, all of a sudden, boom, 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 they really get going to the upside. But so far, clearly, something like a Palantir is bouncing better. Again, no volume here either, but still below the 50-day line and just hasn't, recouped. I don't know what it has, but it's probably recouped, I'm just guessing, 40% of its decline, right? From here to here, now it's here, maybe it's 50%, whereas Palantir's recovered basically all of it. So, you just want to keep an eye on which stocks have bounced the most. Of course, keep an eye on earnings reports, which are going to be coming up here in the next couple of weeks. Some names that have, this is just, I'm kind of going sector by sector here. So these are the electricity stocks or the utility stocks for AI. Constellation Energy, CEG, gapped up a week and a half ago on an acquisition of another big utility. And now it stretches. Like these would be one of the relatively few stocks that, like, say the market did shake a little bit or the group shook out, AI stocks shook out, and it pulled back, say 2-3 days. These might be, entries on dips. Mike, could I buy it here? You can do whatever you want. I'm not giving specific advice in these videos. But to me, it's kind of one of these things where you have had a thrust, you have had volume. It is later stage. These things are up 1,000,000% over the past couple of years. But I would think if you got a controlled pullback, probably a decent entry. I will say, just disclaimer, Cabot Top 10 Trader, we've had these just recently, so we're taking partial profits up here. So maybe I'm talking out of both sides of my mouth, but up here, taking a little bit off, hopefully riding the rest. But I'm saying if you don't own any and you get a little modest shakeout here, it could be worth a shot. This is Vistra, VST, same industry, same sort of chart, same sort of volume clues, so on and so forth, okay? The other strong area is really, the chips / anything AI infrastructure related has come back. That's probably why Palantir is doing well. I still like Broadcom. This is, again, it doesn't always work. Like Shopify was one of these names that was a big liquid stock, and then you have this massive volume breakout. It hasn't worked yet. So they don't always work, but I just always kind of give a little bit of leeway to these big liquid names that have massive, massive buying on volume, big gains. That's just a sign the institutions are piling in. This, again, it's not your earliest stage stock, but it did just come out of this consolidation for 5.5 months or whatever it was. And really, it hasn't done anything wrong. It's just been chilling out here for the last few weeks. So I don't know if it's a breakout or a pullback. It's up to you, but the chart looks pretty good. Marvel Technology, MRVL. There's a lot of names in the group. The original breakout here was quote unquote only back in October, and it had 9 weeks up, and it's basically gone straight sideways since then. So it seems, earliest stage or whatever. Now we'll see. This is kind of, again, it's kind of poking its head to new highs. Is it taking off since then? No. Is it doing anything wrong? No. Is it an uptrend? Yes. So it's just not a classic like that AVGO, that Broadcom chart where you get the big blast off. But nevertheless, Marvel certainly looks like one of the leaders. Okay, CRDO, we've talked about before, CRDO, a little bit of a hotter, they're all hot potatoes, but a little bit of a hotter potato here. But this one has kind of cleared highs. It did have some nice buying volume in here. This thing does move a few percent a day, so just FYI. But so far, so good after this big December earnings gap. CIEN just came to life again. It gapped up in December here on earnings, like the whole group. Again, tedious pullback, but didn't do anything wrong from an intermediate term point of view and has come alive this week. And then this one's not exactly in the same group, but Taiwan Semiconductor continues to look, I've mentioned this a few times. It's just, obviously, it's not your fastest horse, but nice base on base. Again, early January selling on strength. Now it's kind of poking up. It's not letting loose on the upside, but certainly looks to be in pretty good position. So the whole AI infrastructure, networking, connectivity is still strong. Of course, these things go in waves, so there could be a bad week here or there, but so far, so good. Energy stocks, I'm still intrigued by them. Natural gas stocks were the dog's dinner for a couple of years. And you can just see this is EQT. And so it topped out in 2022. So you got this big decline. It just basically did nothing, all the way down here. So for a couple of years, but it changed character last October. Obviously, it's earlier stage. And now it's actually coming out to, all-time highs. It kind of came out above, round number resistance near 50. Ideally, these things shake out, but it's up to you. Maybe they don't. Maybe they go up to $60 first and then shake out, So it looks pretty good. Antero Resource, there's a few of them. You don't need to get into in my opinion, you don't have to get into like the dregs of the industry and find the unknown stock. When it comes to these group moves, sometimes you're just better off just buying the one or two liquid leaders. Antero Resources kind of broke out here actually in late December. Nice follow through so far. Similar type of chart, both short term and long term. One sector I didn't mention is just financials. Listen, I'm not a huge, I like bull market stocks, but like big banks, it's not my bailiwick, so to speak. But I have to say, Citigroup, this actually made it in top 10 last week, which is unusual to say the least for sort of a mega bank. But just a huge volume signature, big breakout on earnings. Just a weekly chart. Again, is it going to go up here? Is Citigroup going to go up here? No, probably not. but just looks like a powerful breakout, and it's a group move, that sort of thing. Goldman Sachs, kind of the granddaddy of bull market stocks, looks kind of similar in here. So, it doesn't have to be an AI infrastructure stock. My guess is some of these things work, whatever that means to you, but my guess is these things go higher. Aerospace names look pretty good. Howmet is certainly one. Now, again, these things broke out they really got going back in November of 23. So again, they're not a lot of names just aren't early stage right now. I mean, you just got to be aware of that, okay? It doesn't mean they're going to fall apart, but at some point they're not going to go up for another, 5 years in a row, right? But this one certainly does look good. There's no sign of distribution really, very tight, breaks out to new highs on good volume. It does have earnings here February 13th, so, 3 weeks or so, but acts very well. Carpenter Tech is kind of another name, sort of more of a little bit different, but basically it's being driven by the aerospace moves above sort of $200 round number resistance here, handling itself well so far. Again, kind of straight up here, you'd like to see what happens from here. Does it come right back in here? Then it looks a little sloppy, shorter term. I'm not saying that's the death knell, but you'd like to see these things kind of handle themselves like they are and then head higher, so we'll see how it goes. And then last but not least, just a couple of medical names. I still watch this Insulet. This is a diabetes insulin pump, newer products and stuff. It fell off a cliff here, highly valued, but still growing fine and just kind of very, I don't know, this isn't the type of action you usually see if like everyone's selling it, It's very tight in here, low volume, a little bit of selling here, but that was support. So we'll see how it goes, but it's an intriguing chart to me. It's one of these names where if I saw another one of these, say on earnings or on some good news, they have earnings late February, my guess is it will probably work, okay? And then CORT is Corcept Therapeutics. A little bit smaller. This is, well, it's a mid-cap, I'd say, small mid-cap, but kind of was sort of a thinner trader. It's grown up a little bit here, had a nice run. It's got some pretty good sponsorship, almost 500 funds. And now, again, it's spent the last 2 or 3 months gyrating up and down. Medical stocks haven't really been where it's at, okay? But pretty reasonable correction given the run, right? I mean, and now it's sort of coming to life a little bit, threatening new highs. So we'll see how it goes. So there's plenty to work with. Again, you're seeing a lot of stocks do this where it's like a week and a half ago or whatever it was, it's near the low end of the range, doesn't look so good. I showed you those stats. I think all these stocks are below the 50-day moving average, 80% or something like that. Excuse me. So now we've kind of rotated powerfully, quickly back to the top end of the range, maybe out a little bit, but not quite decisive yet. Certainly good, certainly a positive, certainly encouraging. I'm optimistic just in terms of putting money to work. You just like to see the ones that really show that strength so that you're not, you don't want to buy 5 stocks and then all of a sudden the market hiccups for a day or two and then they all pull back down here and then you're kind of in the soup, okay? So just let the market pull you into these stocks. But overall, okay, it's not, we're not in the first inning of this bigger advance. It kind of kicked off for growth, like I said, November 2023. Which is something to keep in mind. But so far, it's still sloppy. There's some warts on it. You'd like to see more, but certainly, given what we saw a week and a half ago, the market has acted pretty much done exactly what you'd want it to. So I'm optimistic, starting to put money to work. And like I said, hopefully we'll be pulled into a heavily invested position here in the next couple of weeks. All right, that's all the time I have for today. Thanks for listening. Be sure to come by again next week for another Cabot Weekly Review.